likely to continue impacting the market today. We saw steep falls for the major players yesterday, including Fortescue.
Kate, it does look like the losses from that iron ore price are going to continue on the market today. We've seen the 11th consecutive day of losses in the Chinese iron ore price, and it's down at 88.70 US a tonne. And for the Chinese prices, this is the lowest that we've seen in around about 22 months. Overnight, we did see our big miners once again being impacted negatively. We saw BHP down by 3.6% in the US and down by 3.3% in London. And we also saw Rio Tinto down by 2% in the US and down by 2.1% in the UK. So it does look like those losses are going to continue. A lot of it is that Chinese story. We are seeing slowing growth, and that's really impacting on prices. Of course, if we did see stimulus in the form of property or infrastructure build, that would be a positive for iron ore prices. But at the moment, we're also seeing Europe weighing on demand, and traditionally Europe consumes about 130 to 140 million tonnes per annum. The run rate for 2012 so far is just at 87 million tonnes per annum, so that's having an impact as well. So altogether, the softer global outlook really impacting on iron ore prices, but I don't think many people were forecasting that we'd see a fall this quickly. So the 11th consecutive day of declines, and that's really going to weigh on the Australian market today.
Okay, what about some of the specific companies? We talked about Fortescue, we've also got BHP and Rio Tinto. You mentioned they were down in offshore trade overnight. What about if we span out further and look like things at mining services plays, etc.? Where's going to hurt today?
If we have a look at the companies which are most negatively impacted by the lower prices, they're companies that are still developing their resources. So the developers, the explorers of iron ore, these would be the most negatively impacted. If we have a look at the BHP, Rios and Fortescues of the world, they actually have a cost of about $40 per tonne, or if you include the freight costs, around about $50 per tonne. So even with iron ore prices around that $90 level, they're still quite profitable. If we have a look at Atlas Iron, well, they have a bit of a higher cost, $50 or even higher if you include the freight cost. But the higher cost producers like CITIC, Grange Resources, as well as Jindaobi, they're really quite vulnerable. If we have a look at CITIC's price, that's $73. That's not including freight. If we have a look at Jindaobi, it's about $75. And if we have a look at Grange Resources, that's at about $105. So I guess the companies which are most vulnerable are those are not yet producing and still developing their resource, and then those higher cost producers on the Aussie market.
Okay, what about generally today? It looks like we're headed for losses, Julia. SPI's pointing down just under 0.5% at the open today. We saw falls across markets overnight. I guess everyone preparing for this symposium in the United States.
While we're seeing US volumes anemic, the Australian volumes have actually picked up towards the end of the week, and a large part of that is because we saw options expiry yesterday on single stock options. So that volume is expected to continue this morning, as we do see some people getting rid of stock they were exercised on. So we are actually expecting some strong volumes to go through the Australian market, despite international markets seeing quite anemic volume ahead of Jackson Hole. Of course, all eyes will be on the US and the Jackson Hole meeting. Ben Bernanke's speech will be closely watched, although overnight what we did see was, I guess, a watering down of expectations of quantitative easing. We saw the US market down by 0.8%, and with iron ore prices down lower, it does look like it is going to be a negative end to the week for the Aussie market. We're down 0.8% so far, and of course it has been the material sector which has been the major drag this week. The material space down by 4.2% this week, followed by the energy space having the biggest losses. On the flip side though, the Aussie dollar is now below 103 US, and if we have a look at those companies which benefit, a lot of those are in the healthcare space, and we have seen the healthcare space benefiting from that defensive tilt and the risk-off environment. So healthcare up by 3.7%, and that lower Aussie dollar should be good news for earnings as well.